Hey guys, it's Vinny Gandalf Trader with a quick market update. So let's take a look at what I talked about last week and what I am thinking for this week. So if you remember last week, we were looking at this area here as potential resistance. So my view was that this could be the high of this particular bullish impulse. Um, and we're looking for a pullback in that from that bullish impulse down to supportive areas, and this for me is a pretty big supportive area of 35.50. So what ended up happening mid last week, however, we did break out of that megaphone structure. We went back and hit the previous high and pulled back from that. Hi, so I'm not a fan of double top structures, which some people might look at this and think, this could be a double top. For a double top to be confirmed, you'd need to break support. So we can only treat this as a double top structure if this particular support breaks. But up until then, it's just you know hitting the previous high. We're just in kind of this range structure really, so don't look into the double top too much at this stage. So what I'm looking at here, so yeah, I'm not a favor of double tops, and most double tops never actually play out. So there's a strong chance that we potentially break this high here. um, so if I was a bull, what I'd be hoping for really is no more than a 38.2% retracement from this particular move. So we could get something like that. Kind of an accumulation pattern before we head higher. Preferably, we hold this supportive area here, and head up higher for the week. Or we may spend the most of the week in that area. That's a possibility as well. So if you're a bull, you're looking to build a support out of these prices here and look for a breakout of this particular trend ranging behavior that we've had here. So that's what I'd be looking out for a bull. If I was a bear, and if we are treating this as another boundary in the range, so if we treat this as a range, we made a high here. That's the first range boundary. Here's the second range boundary. We made a third range boundary. So we could be looking at a fourth range boundary down at these 786 levels. You're probably looking for this support to break, and then really what you're hoping for is this support to break. And if we reintegrate below this 38.2 level, then I think it's likely we are in this kind of range structure where we may head to the 786, potentially head back higher up there. So that's another possibility, particularly as I think there's quite a bit of volatility that may happen in tech. So what looks to have occurred last week is quite clear that technology is weak, and there may be some weakness that carries on and persists with technology, and that's what you got to look out for this week. I think is this persistent weakness in technology, and that may overspill into ES. So you may see some more buying in value names, some selling in tech, but that may just keep the S&P 500 within this range structure. But we may see more actual volatility in NQ. So NQ doesn't look. So I would say neutral on S&P 500. I think I'd there's still a chance we head to these levels, but it does look like we've got some supportive, pretty heavy support. We actually never made a lower low on the S&P 500, and because of that, it's still definitely a bullish tainted chart. NQ, however, is different. We did break down that support, and we made a lower low on NQ, so it's definitely a more bearish tainted chart. So if you're a bull, you really want to reclaim this particular level here, the 50-day moving average. It was the peak of last week. We want to kind of break through that level, and test this price area that we have here, the 6 618 retracement. If we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there, then I think we, 6 618 retracement, if we do head back up there Probably have a more neutral stance on NQ as well. So have a look for what price does around this area here. That'd be quite interesting. If we reject this price area here, then it's quite feasible we head to the lows of last week. So we may see a continuation of what happened last week, kind of flat NQ, flat ES, maybe some downward momentum in NQ. And if this is a serious pullback on NQ, we haven't even got close to the 200-day moving average. So I mean, previous pullbacks on the NQ have at least reached out to the 200-day moving average, and we're nowhere near it here. So this isn't even a serious correction at this stage. So if you think that it's impossible to get down to these price areas, it really is not. So be careful with technology next week. And the other reason is when we look at the 10-year bond yields, so these were the pre-COVID levels. So we broke down during COVID. So we're recovering in bond yields. And what's freaking people out is really the pace of this, of the selling of bonds. It is pretty aggressive. We did hit some resistance around the 1.5 area, and many were expecting a pullback. We did, we closed pretty bullish on the yields last week. So the next area of resistance is really this 2% area, and I think I'm not sure we get out there. That seems pretty aggressive to me. And if we do something like that, then I think you'll see a lot of selling in technology names. My feeling is we kind of get there slowly, so maybe range out here for a little while before heading out there. So what happens with bond yields is going to be interesting. But like I said, if we shoot the upside here, you'll see a lot of selling in ESNQ. I don't know if that's my base case. So keep an eye out on 10-year yields and how that impacts technology. ES doesn't look anywhere near as bearish as NQ. So if we break out of this all-time high of ES, then I think we can sustain a decent grind higher in ES. So that's what I'm looking at this week. Just one other thing I wanted to talk about was a stock that I like regardless of what happens with bonds, with selling of technology, and that stock is Google. I really like the Google chart. Just quickly, this is a chart of so the FANG man stocks, so FANG, Facebook, Amazon, Netflix, Google, and then man, Microsoft, Apple, and Nvidia. These are the 7 kind of mega cap high growth stocks. Just looking at their percentage performance for COVID lows, you can see Nvidia greatly outperformed, up 150% even with this pullback. Apple still up 120%. So what I was kind of looking at here is, what did all these 4 stocks do? You can see Nvidia took a huge cut. So did Apple. So did Netflix. So did Amazon. But the 2 stocks that remained pretty much flat through this entire volatility is Google and Facebook. And I think there's a good reason for that. So, advertising, which is Google and Facebook's main revenue source, is a cyclical business. So companies spend less on ads when they're in a downturn. But Google, however, if you look at their financials, barely took a hit during the COVID downturn. And as the economy is opening up, Google should be a pretty big winner as small, mid, and large businesses, they start to ramp up their spending on ads on Google's platforms. So I'm expecting, while they had a pretty incredible quarter that they posted here, incredible upside surprise in terms of revenue. So they were barely impacted from COVID. Their revenue should accelerate further as the economy opens. And I think that's one of the reasons why you're seeing no one's selling their Google stock. No one's getting out of Google just as it's about to, in my opinion, kind of trend to the upside. There's other things that I like about Google as well. So they got some new products. YouTube Shorts is a competitor to TikTok, which is a nice potential add-on business. But also many people don't realize this, but Google is, in my opinion, probably the top AI stock in the world, and the top autonomous vehicle play in the market. And everyone tends to focus on Tesla, but Google with their Waymo business unit, which is a neural network AI based autonomous unit that's been going for over a decade and been developing their technologies, and they're the only company that have achieved level 4 autonomy and actually have approval to trial this service to real passengers, so real autonomous vehicles in Phoenix. And they are well ahead of the competition, including Tesla, including Cruise at GM and Baidu and some of the other major competitors in this field. And really, when you look into the future of mobility, investing in the companies that are going to win in autonomous are really what you need to focus on. Electric vehicles is nice, but it's actually a red herring in my opinion. Really, what you need to be looking at is who's going to win in autonomous. In my opinion, that is going to be Google. They also have, if you look at their financials, they have $140 billion in cash. They're priced at 29 times forward earnings, which is not that much more than the S&P 500, and this is a company that's growing over 20% a year. So cheap, extremely cheap, underappreciated, new products, probably the leading player in autonomous vehicles in the future. This is my top pick stock for 2021, 2022, and it's something I'm going to be playing quite a bit in the near-term future. So let's look at the technicals. Google, and just looking a bit longer term, just look at, it's been in this kind of range structure. It was in a range between basically 2018 and pretty much the end of 2020 for 2 years, and then hit back to the bottom of this range in COVID. So that's what we're working on. Basically a 2.5, 3 year range. And we've only just broken out of this kind of range structure to the upside. And even within that upside movement, it's really been a kind of a bullish range structure in this kind of ascending wedge type structure. And we recently, through the earnings, we gapped above that trend line to the upside, and we've held that gap. So if we look at the daily, we've attempted to fill that gap numerous times. We've dipped below, I think 4 times, and it's been bought up pretty aggressively. And in my opinion, I think what we're doing here is we're letting 50-day moving average catch up with price. We'll continue chopping around in this area, and I think Google is ready to break out to much higher prices, and I think it'd be well deserved. So that's what I'm looking out for. I think any pullback, if you see 50-day moving average catch up, may take a few days. You see price touch the 50-day, I think you want to leap this or buy stock, and that's what I will be doing. So yeah, that's my thoughts on the market and my thoughts on my top stock for 2021. Thank you.